Welcome to our webinar, Funding for Sustainability Projects, Where to Start. My name is Rollo De Sausmarez. I'm not leading this event, but I'm from the Sustainable Business Initiative, which is a Guernsey Chamber of Commerce initiative. And I'm going to be introducing the event. We set up the Sustainable Business Initiative to help Guernsey companies find out more about sustainability, including sustainable finance. We're keen to talk to people or businesses who are able to share their expertise with others in sustainability. So if you have expertise, please get in touch. But if you just want to learn more about sustainability and how your business can be more sustainable, then also please get in touch. It's a community, we want to grow it. You can find us by searching Facebook, Twitter, or LinkedIn, and obviously through the Guernsey Chamber of Commerce site as well. So please get involved. I'm going to be running the slides for Carrie today, and I'll hand over to Carrie in a minute. A bit of housekeeping. First of all, I'd like to say thanks to Guernsey Finance for letting us run these fringe events alongside their Sustainable Finance Week, which is a really great initiative, and I'm glad you're all supporting it. The talk's going to be a little under 30 minutes long, and we'll have 10 minutes for Q&A afterwards. If you've got questions, please just write them in the chat. You can find the bar at the bottom of the video feed. Just leave your question there, and I'll read that out to Carrie later, and we'll have a little session on that because we want this to be as useful as possible to all the delegates involved. So without further ado, I'm gonna hand over to Carrie Ng. She's head of commercial banking at HSBC in Guernsey. She's got an amazing record of working in this area, and we're delighted to have her on board. So I'm just going to hand over to Carrie and start the presentation.
Sure. Thank you so much, Rollo. And I know that in a minute's time you'll see the presentation on the screen. As Rollo introduced, my name is Carrie, and I head up the commercial banking business of HSBC here in Guernsey. I've worked with commercial businesses, from small to medium-sized companies to large state-owned enterprises throughout my career in banking, and the sustainability has been a topic that has been around for many years. It is not a new trend per se, and I've worked with a lot of companies to, before green loans or sustainability linked loans, to look at how bank finance or funding can help businesses in achieving their sustainability goals. And in Guernsey, I'm currently a member of the Sustainable Business Initiative that Rollo co-leads, and I also sit on the Guernsey Finance Green Strategy Group to discuss with fellow local members and committee members around how can we move forward in the sustainable agenda for Guernsey. So today I'm going to speak on the topic of funding for sustainability, where to start, which is centered around sustainable finance. In this webinar, I will give an overview of sustainable finance, and will cover details on green loans and sustainability-linked loans. Further resources will be provided at the end of the presentation if you wish to learn more. So we flip to the next slide on the overview of sustainable finance. As businesses transition to a low-carbon economy, a lot of financiers, including banks, have supported and funded these sustainable economic activities, which gave rise to a market of sustainable finance. And we've seen in market research, the 2019 HSBC Navigator survey, that the view is supported that there is demand for sustainable finance. In particular, 26% and 24% of businesses are motivated to become more sustainable, to improve operational efficiency, and to meet regulatory standards respectively. However, 35% of businesses see financing as a barrier. We've seen sustainability being increasingly at the forefront of strategic planning, and under this backdrop, sustainable finance has developed over the years. Currently, sustainable financing can be structured in a variety of forms. Some examples of such instruments would include the green bond, green term loan, green revolving credit facility, and sustainability linked loans. And while sustainable finance can take various forms, fundamentally it is built upon certain key tenets, such as industry guidelines like green bond principles, etc., and external evaluation. And in the next sections, I would like to delve more into green loans and sustainability-linked loans. So first, let us look at green loans. In short, green loans are loans made available exclusively to finance or refinance new or existing green projects. And on this slide, I have outlined 4 core principles that set out the characteristics of a green loan. These green loan principles was developed by the Loan Market Association, which is an authoritative voice of the syndicated loan market in Europe, Middle East, and Africa, as establishing an industry standard across geographies, and are also aspects that businesses should think about when approaching the financiers for a green loan. So the 4 core principles are, first, the use of proceeds. Utilization of a green loan should be for green projects with clear environmental benefits. Second, it is the process for project evaluation and selection. Borrower of a green loan should be able to communicate its environmental sustainability objectives and be able to manage any material environmental risks associated with the proposed green projects. Third is the management of proceeds. Borrowers should establish an internal governance process to track the allocation of funds towards their green projects. And last is on reporting. Borrowers should make and keep readily available up-to-date information on the use of proceeds under the green loan, which will be renewed annually. Information may include a list of green projects, amounts of green loan allocated, and their expected impact. For example, the amount of greenhouse gas emissions being reduced. On the next slide, you will find examples of what constitute a green project. This list is indicative and captures the most commonly used types of projects. In Guernsey, for example, you will have seen on the news that Guernsey Post over the recent years have transitioned to using electric vehicles. They've installed charging infrastructure for their fleet, and also they have installed solar arrays. So these would be examples of green projects that Guernsey Post has undertaken. In Mexico, HSBC has supported a chicken and dairy farm to work towards their sustainability goals, and again is another example of how green loans are being deployed. So initially, we financed a biodigester that turns waste from animal manure into energy. And more recently, with the cost of solar technology decreasing, the farm wanted to install solar panels to further support their energy needs, and they came to us for funding. So having reviewed the requirements and also the nature of the project, it is deemed a green project. And hence, a green loan was written to support this project, which helped the farm transition into clean, renewable energy, while also lowering the cost of their day-to-day activities. It is worthy to note that some lenders may require an external review when approving or renewing green loans to ensure alignment with part or all 4 components of the green loans principles. In the next slide, we detail a little bit around the various forms of external review, such as consultant review, verification by qualified parties such as auditors or independent ESG rating providers, certification against an external green assessment standard, or getting a rating by qualified third parties such as rating agencies or specialized research providers. A common question that we get asked a lot is, well, why should businesses take out a green loan as opposed to a normal loan? Well, green loans allow businesses to really showcase their green credentials to stakeholders by demonstrating that the loan is ring-fenced for green activities that are recognized by the financiers based on an external market standard. And what we see is that many more organizations and individuals are now considering a business's green credentials when making decisions about whether to work for them, work with them, or whether to invest in a particular business. So helping such green credentials would help build the company profile. Being sustainable can also help businesses save money and create long-term value by increasing consumer demand, promoting employee loyalty, and also the value of the brand. Guidance on green loan principles is being refreshed continuously to give the market more clarity on the application of the framework and also to promote a more harmonized approach. So do continue to watch this space. Next, I would like to turn to sustainability-linked loans. Differing from green loans, sustainability-linked loans incentivize the borrower to achieve a set of predetermined sustainability performance objectives. The lending under sustainability-linked loans is not tied to a specific green project, and the use of proceeds in most instances is for general corporate purposes. So the borrower's sustainability performance is measured using a set of what we call sustainability performance targets, which may include key performance indicators, external ratings, or equivalent metrics which measures the improvements in the borrower's sustainability profile. Sustainability-linked loans look to improve the borrower's sustainability profile by aligning loan terms to the borrower's performance against the sustainability performance targets. For example, interest margins of the loan will be redetermined over the life of the sustainability-linked loan depending on the borrower's performance in achieving its sustainability objectives. Similar to green loans, there is a set of core principles for sustainability-linked loans, which can be found in the next slide. First, it is the relationship to the borrower's overall sustainability strategy. Borrowers should be able to communicate to lenders its sustainability objectives and how these align with its proposed sustainability performance targets. Second, it is around target setting. This is about setting ambitious and yet meaningful sustainability performance targets that speaks to the sustainability improvement of the business. Any targets would normally be based on recent performance, say the last 6 to 12 months, and businesses are also encouraged to seek a third-party opinion to the appropriateness of the targets being set. Third, it is reporting. Borrowers are encouraged to publicly report information relating to their sustainability performance targets, and also to provide details of any underlying assumptions and methodology. Last, it is review, which is again to get external parties such as an auditor or an environmental consultant to verify the borrower's performance against its sustainability performance targets. To bring this to life, in the next slide, we have here a list of common sustainability performance targets, together with examples of the improvement to be measured. And I'll just pause here for you to read the slides a bit, given I understand that that's quite a lot of content. So one common example is around energy efficiency. We have seen it in developers, for example, who are refreshing or renovating buildings, and as part of this renovation, would like to improve energy efficiency of the building. So we can see the category of sustainability objective would be energy efficiency. And the target would be to measure any improvement in the energy efficiency rating of the building and/or machinery if it is a factory, or any targets that are relevant to energy efficiency of the project. And as illustrated earlier, loan margins of the sustainability-linked loans can then be redetermined on an annual basis or as and when renewals and reviews come up, considering where or how much the improvement is around energy efficiency. And as with green loans, guidance on the sustainability-linked loans principles is also continually being refreshed. So again, stay close. And if your business would like to have access to sustainable finance, do approach your financiers to see if they can support you with a green loan or a sustainability-linked loan. For further information on sustainable finance, you can visit the links in the following slides. And this will be all from me today, and I will be happy to take any questions. Thank you.
Excellent. Thank you so much, Carrie. That's been really educational. So I've got I'm going to stop my screen share now, and so I can see the chat, because I don't know if I can do both. So bear with me a second.
Sure.
And I've got some questions here. So the first question that we'd like to put to you, Carrie, is given the COVID-19 situation, how has this changed the sustainable finance landscape?
Yeah, sure. Thank you, and it's extremely timely and relevant. So I guess as a lender, we see COVID-19 as and that has presents opportunities in sustainable finance. Economic stimulus packages established by governments around the world would be vital to sustain economic activities, jobs, and livelihoods over the next few years. And governments are really in a position to drive a massive wave of investments to stimulate the global economy, either by using their own balance sheet or reducing the cost of private capital through various forms of financial support. And what we've seen is the trillions have already been committed to supporting the immediate economic stabilization and also the longer term economic recovery. And what we see is twofold. And first, we see a lot of potential for economic stimulus packages to contribute to building a healthier, more resilient, and hopefully a net zero emissions economy. For example, economic stimulus packages can unleash investments in renewable power systems, and they can boost the construction sector via green buildings and green infrastructure, or to support the automotive sector while pursuing clean air. So from a sustainable finance perspective, all these projects would require a level of funding, so an opportunity for sustainable finance. What you may have seen in the business CI communications earlier is a recent report by Ernst & Young under its 55th Renewable Energy Country Attractiveness Index, which also shows that renewable energy sector is expected to bounce back quickly from COVID-19 as the long-term drivers of investments remain strong. So we see sustainability and economic recovery going hand in hand, and where there is investment in sustainability, there will be a role to play for sustainable finance. Thank you.
Okay, so there was growth in this area before COVID, and you foresee even more growth afterwards, yes, as we yes, move out of it. Yes. That seems very valid. Can you give us some further examples of sustainable finance in action?
Sure. I'll pick on an example that is a bit more complex, but it encapsulates a lot of what we've talked about earlier in the sharing. So in 2019, HSBC has partnered with Walmart, the US retailer supermarket, to roll out a finance program that pegs a supplier's financing rate to its sustainability standards. So this is the supplier of Walmart. Under the scheme, Walmart suppliers who demonstrate progress in their sustainability credentials will have access to an improved financing from HSBC. The way that suppliers' progress will be measured is against two parameters. The first is Walmart's own Project Gigaton, which is an initiative Walmart launched to rid a gigaton of greenhouse gas from their global value chain by year 2030. And secondly, against the Walmart Sustainability Index program, which is developed by the Sustainability Consortium, which is a global organization dedicated to improving the sustainability of consumer products. This supply chain finance program is one where variable pricing is used to incentivize suppliers to meet sustainability targets set by Walmart, and I think is a good illustration of how sustainable finance can take different forms. Earlier, I've shared information about the more traditional green lending, and I think this example speaks to more innovative schemes. there is also other program-based lending that finances the investments needed by key suppliers to, say, put in tools and equipment to lessen the company's impact on investments. And this can range from reducing energy consumption all the way through to putting in place water treatment plants, etc. And I think bringing this up is to just to remind businesses, when you think about sustainable finance, it is important to think about the wider ecosystem that the business operates in. And sustainable finance can be really powerful if we can engage the entire supply chain, as seen in the Walmart example, and how we not only help Walmart, but also their suppliers to improve and contribute to the sustainability objectives.
Excellent. That's great. So does anyone else have any other questions they'd like answered? We've got Carrie with her expertise in the house right now with her undivided attention. So if anyone else has anything, please feel free to either ask directly by opening your mic, or just type into the group chat. No, I'm not seeing any microphones turn on there. I think maybe that's where we're at. So I'll just share this screen again to so that people can see the call to actions there. So if anyone wants to know more about sustainable lending, then check out the Loan Market Association, the sustainable lending section of it. The Guernsey Chamber of Commerce Sustainable Business Initiative, you can find us on Facebook or on LinkedIn or on Twitter. And if you want to find out about HSBC's sustainability angles, then there's a link there as well. And what we'll do is we'll put a recording of this presentation on the Chamber of Commerce and Sustainable Business Initiative locations, so that people can get it if you have colleagues who might want to hear about it, or indeed get in touch with Carrie direct if you'd like to know more. So I think what I'd like to do is end there and say thank you very much to Carrie for putting her time and effort in to do this presentation for us. So thank you very much. Polite applause that you won't be able to hear.
Yes, thank you. Thank you, Rollo, and thank you all for your attention as well. As you said, any questions, just ping it onto the Sustainable Business Initiative. I'm a member of that, so we can pick up questions separately if there's anything that comes up to mind after the session. Thank you. Have a good day, all.
Thank you all very much.